I do premium finance for 15 years, and premium finance was always my passion. And I started producing 1, 2, 3 cases a year. I retired for a little bit. COVID came, and you reached out and he says, Tomer, why won't we join us and let's build this premium finance department together. And it's one of the best journeys I ever started.
That's awesome.
It's been awesome. We started 2 agents.
Yeah.
Today we work with thousands of agents. At the same time, we started with 1 or 2 cases. Today we have 60 cases in underwriting at one moment. So it's a great process. It took a while, but it's something that really helped me get fulfilled every day. So I'm a banker by trade. I was a lender. I've started with lending against apartments and doing mortgages. I went into commercial lending, so I financed some big buildings in the city from $50 million to $2 billion loans on one building. Real estate market got tough in 2008. I kind of turned myself into asset-based lender. So I gave my clients loans against equipment, inventory, diamond, art, account receivable. So when I was introduced to premium finance, it was a no-brainer for me. This is the easiest thing in the world. And I fell in love with the concept, and I decided that I'm going to stick to it. And today, my background in doing asset-based lending helped me because, 1, I know every bank and every chief lending officers in the industry. 2, I can help our clients find collateral where most people can't. So being creative and having the unique background that I have really helped me place all those deals and make sure the client is always happy. So premium finance is a technique that we use other people's money to buy large policies. But most clients don't care about large policies. They have goals, needs, and problems they're trying to solve. So the most common problem is retirement. Everybody wants to retire. But if you use premium finance and you use leverage, you use someone else's money, very similar to something that most of our clients do. Most high net worth client has a mortgage. So I always correlate the story of premium finance to mortgage. So if you take, for example, $200,000 property that you buy and your market goes up 10% and you make $20,000. But if you take $800,000 mortgage and you have $1 million property and the market goes up 10%, you made $100,000. It's 5 times the return on the same $200,000. All we do is we swap the real estate with an IUL policy. And now the client's retirement income in retirement will be 5 times higher. Now, not every policy is a good fit for it, and that's where designing it the right way is key. But we have great IUL policy with a 91% cash surrender value. So the 20% will cover everything that you need, and it creates a very unique situation where the insurance company is the winner because they get a very large premium. The bank love it because they give you a loan that's fully collateralized by the policy. So they take no risk, they make interest rate. Nothing banks wants more than take no risk and make money on interest rate. And the client gets a 5 times the return for their retirement. Not to talk about the agent getting a nice commission check. So it's one of those win-win-win-win. And everybody's happy in it. Again, it needs to be done correct. You need to carefully choose the carrier, carefully design it, choose the right bank. And if you do it that way, it's a great success. Retirement planning is the most common, but we use it quite a bit for estate planning, for non-qualified deferred comp, for business retention for businesses. And we do have some designs that we do to kind of rescue your qualified plan and pay taxes today rather than pay taxes later, and improve the retirement income that our clients get. So all of those, we just use leverage. Again, that's my banking background.
Yep.
And we used cash value in the policy to secure those loans. And when you do it right, it's magical. So my approach is always be very, very conservative. And we always show our client higher than market rates. Now when we knew the market rates are going to come down because the Federal Reserve has told us that, we assumed very small reduction in interest rate, where in reality, the Fed rate cuts were much bigger than we show the client. So we look like hero, where today I run an illustration for the client and I show him, you're going to pay 7% interest rate this year. In reality, when I get him the commitment letter, he's going to be today sub 6%. So that 1% cushion is huge different in the end of the year. The premium are large. When we borrow $1 million, $2 million a year, that 1% make a big difference. Now, premium finance it's very important to get this little arbitrage between what the IUL generates and what the money costs. Now, historically, 15 years or so, it's over 4%. In many our illustration, we show sub 1%. So we're preparing our clients for rough days, and when things go their way, and we know they'll continue to go again because the government told us, we look like geniuses. The current pricing is the IUL just keep getting better and better. We came out of a period of time that interest rates were very low, and the caps on the IUL were relatively low to historical numbers. So now our return from the product goes higher, the cost of the money goes lower, and it's almost like a little perfect storm for premium finance. If you're not in premium finance, you gotta get in it now because interest rate will continue to go down. Again, I don't promise any of my clients what President Trump is telling the clients. Sure. We're gonna go to 2 or 3%. We're still showing our clients 6, 7%, where in reality is we're getting them 5 and 6%, and it's gonna continue to go down. So it's very hard to time the market when it comes to equities. I can't do it. There's smarter people than me, but it's really easy to time the market when it comes to interest rate because you have the government official telling you where interest rate is going to go. And right now we know it's going to go down. Yeah. Client that starts today can pick better time. So when the way premium finance work is you take premiums over 7 or 10 years. In the early year when the loan is small is where you want interest rate to be high, right? Interest rate is a curve. It's going to keep going up and down forever. It's never going to be exactly what we show on the illustration. So if you're paying 8%, which is where we were a year and a half ago or 2 years ago, you want it to be the first year, the first 500. When you borrow the second year, interest rate went from 8 to 7. Now we're borrowing the third year. Now you have $1.5 million loan. Interest rate is going down to 6. Right. I have client that started at 1.5%. It was awesome. Money was free. Money cost us 1.5%. S&P generated 9, 10, 13. We printed money. I looked like a genius. Now interest rate went up. We went from 1.5 to 8. But I always make sure that the client is prepared to pay out of pocket. In all my designs, I will never sell free insurance. No out of pocket is not an option in my design. Again, it's something that I've told you many times. If the client doesn't want to pay anything and is looking for the free solution, I'm not the guy for it. And I think that that's how you get in trouble. So we made the client pay out of pocket. There's a lot of cushion in the policy. Interest rate go to 8. Not a big deal. Everything performs as well. Plus, I've never shown my client interest rate stays at 1.5, 2 or 3% all years. I was always conservative. I said, yes, you'll get 1.5, 2% this year and next year, but let's assume it's going to go to 5. So when it went from 2 to 8, it wasn't a shock for my client. All the policies still in the books. They're all happy, and they're all sending their friends because they realize now they see that 8, 7, 6. Now it's time to get it back into the market, and it's awesome. So I've learned in the industry that it can take you 10, 15 years to build your reputation, but it takes one client and one bad experience to ruin your reputation. Making the quick dollar doesn't worth your reputation if you're looking to do it in the long run. So one of the first conversation we had is we're going to do the right thing for the client first, every time, all the time. And we're not going to move our eyes off that goal. Because once you do, it's very easy with premium finance. The commissions are very large. If you try to get a case done that shouldn't get done, from my experience, it's going to come back to bite you down the road. And chargeback and lawyers is something none of us wants. So if you do the right thing for the client every time, all the time, you won't be in trouble. There's going to be no chargebacks, no lawyers. I'm happy. I'm doing it 15 years. I had one case in 15 years, in hundreds of cases I've done, that have collapsed. And again, that has nothing to do with us. It was the client and his agent having a fight. Everything else is still on the book. Some clients are happier than others. It all depends when you start, how you start, but everyone is on the book. Everybody's happy. We get a chance now, after doing it for so many years, to start giving clients the checks that they expected. And because what we do and the way we do it is very, very, very conservative, we outperform all our expectation. Each one of our clients that's been with us for more than 5 years, we have overmet their expectation, and the numbers look much better than we originally showed them. It's our job to go and find the best deal for the client. When I started, they gave me a list of 2 banks.
Yeah.
I wanted to go and help one of my clients. My client actually came to me and said, Tomer, what do you know about premium finance? And I dug into it, and they told me you can do it with this bank and this bank. And I said, I have banks that would do it at half the price. Why my clients need to pay more? Then by a mistake, I bumped into the concept of IUL, mind-blowing. And I was told you can't sell that product. And I said, why? I can have much higher return, lower cost, better for the client again. And that's when I left that carrier. And I focus on IUL and finding the right bank. Today, out of the almost 60 cases we have in underwriting, we're using 9 different banks. Like life insurance product, like financial advice, every client has a different situation, different collateral, different income, and different net worth, different goal in mind.
Right.
So if we match that to the bank, the same thing that we match it for the client, it's a great success.